Hey guys, welcome back to another market day. My name is Axel. I'll be your designated inquirer for today, and it is 8/10/2020. Now, it was an interesting day in the market. Quite a few things happened. We extended the drop from the all-time highs that were put out last Thursday. We had a drop of what is effectively 3%. Okay, 3% is nothing, it's a significant drop, but still nothing to write home about, right? And more importantly, we've been hitting and dropping through significant support lines, meaning right up until like this area right here, right up until the bottom of a swing basically is a support. When it comes back up and whatnot, so long as it stays above that level, you can kind of call it a support. If it meets that particular area twice and it does not break through, it is a stronger level of support. There's some that happen to act as better supports and or resistances on the upside than others. For example, this one right here, which was like a downturn here as a level of support here, acted as a level of resistance here, and so on and so forth up to this point again, and at this point again, and at this point again, until it was able to break through and it went to here. Depending on how many times it goes to meet that particular level, kind of indicates the level of strength of that particular support and or resistance area. When the stock goes to break it, depending on what stock you're talking about, it may or may not have a more violent jump through that level. Now, as we're going along, what we see here is that this was not exactly an established level before, depending on how far back you want to go. But it wasn't necessarily a surprise that it would stop here. We knew that it would happen somewhere along the way. This level was established, and so it met it again. Around this level again was after we broke this and we crashed through a couple other different supports. It settled on to just below this area right here and ran back up this way, past it. On the way to try and retest again, it stopped at this level. And so it's now basically the stock is working off of a now, not this previous level, but now this level. Now there's a set market that thinks that this level is okay to pay at and or above. And so it decided to do that. Generally, from a technical standpoint, that's what happened today. But from an economic perspective, it is harder to pinpoint exactly why this happened today to try and give an explanation. Because although the president's economic-centered executive actions were passed yesterday, their exact effect and how useful they are for the general market and more importantly for the economy is not necessarily obvious, in that the economic benefit from unemployment insurance payments of $400 or more isn't really going to be seen by anybody of the general public until maybe a couple months from now, which by then we might already have a bill passed by Congress. Short of this, there was also him unilaterally changing and or cutting income tax, which doesn't make any sense. It causes a further hole in being able to pay for Social Security and other benefits like Medicare. There is and a student loan. Basically, whether or not I think there's forgiveness on interest and basically moratorium on payments, and then he only told states and counties and whatnot to only consider a rent payment or an eviction moratorium. But it's not necessarily like binding. It holds a strong language that it says shall consider, so they have to look at it as to whether or not they want to implement it, but it doesn't mean that they have to. So something interesting that happened over the weekend, or that I learned over the weekend, was that on August 1st, when these protections essentially stopped, there were a lot of people that ended up getting evicted, namely in the city of Los Angeles. And the result of that was a bunch of moving trucks basically late at night, August 1st, of people leaving because they couldn't pay. And it seems like a lot of landlords were requesting basically the sum of the late payments of rent to all be paid all at once on August 1st. And for many, that was impossible. They were barely, with the money that they were getting essentially from unemployment insurance, was probably only enough to pay for food, maybe their car insurance, etc., and a few other things. Because paying for rent, if there was late rent in the city of Los Angeles, is probably pretty high. So it wasn't exactly something that people could say for certain, yo, sure, we can pay all this rent that we happen to be missing for the past, since March, when we haven't been getting paid because we haven't been working. Yeah, it's been pretty tough for people. The effects of this, of like just kicking these cans down the road, we're starting to see the effects of it. We're starting to see having to deal with that can having been kicked down the road. It's not something that we can basically just simply shove under the rug. Finally, credit is something that the credit number is something that ended up coming out. And if I go and check it out right here, we can take a look at that. Now, right here we see that from the website is federalreserve.gov. Okay, they put out these numbers. The number is no longer negative, but it is still a very small 2.6% increase over the last month. So this is essentially the story of credit as it pertains to this country, basically consumer credit. That outstanding consumer credit had only grown 1% in the first quarter, and so far in the second quarter dropped 6.7%. But when we're talking about month by month, that in the month of April, it dropped basically a record 18.7%. That it further dropped another 4% in May, and only increased from the lowest levels in May, only 2.6%. Because this is only percent change on an annual rate, percent change. It doesn't mean that it all of a sudden recovered that amount, because if we go to charts, this is only describing the percent change from month to month. All that's telling us really is that in the next month that we have here, credit only recovered a certain amount. Here, because the number wasn't that drastic and the maximum was like a level of 10%, it's a little difficult. 8.52% was a decrease from month to month, right? From month to month. So from here, it basically dropped. This is getting difficult. All right, so here dropped 1.3, or it was increased 1.3%. Okay, and then on next month over, it dropped 1.39. All right, so that's where we're back in 2008, etc. Whatnot, when we started to realize that there was an issue here, where people started not paying their mortgages, their credit cards, all these things, because they were now unemployed, they were losing their homes. Banks are basically foreclosing on them. This was a downturn in basically effective consumer credit, right? The worst month, it's still pretty bad because we had 1 month that was down 7%. The next month, it still dropped 3%, and the next month after that, it dropped another 8.52%. But here, in one shot, in one fell swoop, we basically dropped what was in the other one. We just go to the other one. Just go back here. It was at 18.7% in one month. So that's a gigantic amount. Because if you drop 3% 1 month, 7% the next month, you're dropping 3% off of the biggest number is still 7% dropping off of a smaller number is still maybe comparable to the 3% drop off of the bigger number. And that's how percentages work. Sometimes when you continually drop percentage, 8%, a single percent, the initial first percent that was dropped was still a bigger number than the subsequent numbers, even though they were the same amount or maybe even a larger amount. Because the percent you're taking off matters off of what? And so when we get to this 18%, it's a much bigger number than per se. Let's see if I can get close to this right here. It was down 5%, and here is up 5%. So we went from being up 5% to a swing of down 5, down 6. So that first 6% drop was pretty heavy, and then on top of that we had an 18% drop further still. So that's 18% is a huge amount. In contrast, if we take a look at what an 18% drop here would be, if we dropped 5% and then another, if we try and make that calculation based off of this data, which we can. All right, so assuming that this is the height, right? Height. All right, here we're gonna drop 5%. Okay, so there we drop 5%. Okay, assuming that we drop the 6. The 6, that was that number from the height. Okay, we're just going to draw a couple lines here. The first percent is going to be just about 6%, which is right there. Okay, that gets us down from basically the highs of now, which is around, if we assume there to be like a level of actual credit, outstanding credit in dollar numbers, assuming that it's like this number, which here it's 11,283, we dropped to 10,500. That's pretty significant. But from here, if we go ahead and drop still another basically 18.7% here, that's a huge amount, right? That's a huge drop. So total, we dropped in terms of consumer credit a total of, I gotta get this right, we dropped basically 23%. Okay, that's the number that we dropped in totality. And right now, and still the next month, because we're not done yet, if we go here, the next month over, we still dropped another 4.2%, and then we only went up 2.6. So we need to go down 4.2 and then 2.6 up. Okay, so here, from here, we're gonna go another 2.6% down. Okay, so total from top to bottom, we went down basically 25%. So the total of outstanding credit in the United States dropped by 25%. That's huge. Okay, and then we went up 2%, right? Or if we go here we went 2.6. All right, so we're gonna go up 2.6%. 2.6% there. Okay, so total drop from the peak, right? From peak is this amount. We went down 23%. That's still the deficit that we're at right now in consumer credit. That is a gigantic hole. Okay. And we still don't know if we're going to be continuing to drop credit further on later this month or subsequent months, because the number that we got right now was from June. We still don't even have July's numbers, and we don't have these past few weeks numbers, which we're at 810 right now. We still have basically 2/3 of the month left, and it can still get really bad. We're not out of the woods yet by any stretch of the imagination. So yeah, basically what I maintain right now is that the economy is still, or the stock market is still not reflective of the economy. That part's obvious, but that I don't think that they're still quite adequately pricing in the reduced purchasing power of the consumer. Even though the consumer may or may not feel confident, they may not. The consumer in and of itself may still be really bad at determining how much they can still spend and what they should be doing here into the future. So, especially considering that for a lot of companies, the stock gains that we've been seeing has been from subsequent like balance sheet accommodations or improvements. What that means is that they lessen their expenses. But for us, what that means is that they basically have been firing people. There have been consistent layoffs by companies. So if they felt, which is kind of hilarious, if they felt, they probably feel better as a company being able to move forward, but it is painfully obvious that they do not think that the economy is in a better place. Because if it was in a better place, then they would not be firing people to try and get ahead of the losses that they think they're going to be, incurring. So, that's basically where it stands at the moment. This is basically a second day, although with long tails, which I don't like, because it could possibly mean that we're moving higher later on. I don't like these long tails at the bottom. But that's basically where we're at the moment. Yeah. That's Congress, that's the president, that's the market, that's the economy. Is there anything else that is going on right now that is impactful to this? Not at the moment. No. All right. So till tomorrow, we'll catch up again. And if you guys still have any questions or whatnot in terms of, particular economic indicators that you want explained, or you don't know what something means, let me know. And I'll be happy to talk about it. I'll be happy to do like a short calculation. If you guys want me to do math on screen, I will do the simple math on screen, because it does not take a lot to be able to do these calculations for your portfolio, etc. To get a number, because it's basically percentages. And trust me, there's no integrals, there's no calculus that you got to do to figure that out, at least not yet, for the things that we're talking about. So till next time, you guys stay safe, stay healthy, and take care. Bye.